Hey, everybody, welcome to our Sunday Notes live session. Great to see everybody. Hope everyone's been enjoying their weekend. This is our second episode, second show of Sunday Notes Live. And the whole point of this is to follow up on the notes that I've sent to everybody in the room. So, in the Sector Secrets Mastery, the options room, the futures room, sent those notes out. There's a work flowy link. You don't need a username, you don't need a password. I've updated this with basically what's on the radar for the week. And I kind of did this as a chart book edition because I've got a lot of charts that we're going to go through probably a good many of these in our talk today. All right, including how I look at sectors and how we want to understand bullish, bearish, neutral markets with the tools that I give you all that are available in the room drives, as well as many of them are available in the download section over at countdowntrader.com for those of you that are not yet members of one of our simpler trading rooms. All right, so with that being said, again, happy Sunday. Hope everyone's had a good Sunday. I just finished eye guzzling the Drive to Survive season number 4. Crazy season. I got to think Netflix was just absolutely over the moon when they saw the ups and downs of this past Formula One season. We're getting ready for the first race of this year coming up next weekend. Very excited about that. So let's get to it. All right, shall we? As always, this show is about your questions and about the notes and an outlook on this week. So let's go and start tackling the questions here. All right, Mo was double green, now turning double yellow. Is this still valid for an entry long? Can I speak to the point of validity in this example? Sure. All right, so as we dive into Mo, let me take a moment to sort of take a pit stop in into one of the charts that we have in the notes. Now you'll notice if you look at a 1 month look back, XLP has actually struggled. You can see XLP there. Actually, 1, 2, 3, 4, 5. Wow. It's actually tumbled on the 1 month performance. It's actually still number 3 on the 3 month performance. So when we take a look at the 1 versus 3, that 1 month can show a lot of the volatility that we're getting, while the 3 months shows some of the steadiness in terms of flow. Now, when I look at XLP, why would we bring that up when we're taking a look at Altria? Because Altria is heavily weighted within the XLP, within that consumer staples sector ETF. So is Mo still viable? It is. I will say this: Altria and the staples sector have been actually really good to us overall in the mastery. But here's the thing: sometimes we simply lose. Sometimes we're going to take a look at what's happening to the value of our option in this area and just say, look, we may not be on the right side of this trade, and that's where we want to deploy those paper cuts. Do they sting? Absolutely. Do they sort of leave a mark? No, but they remind us that, hey, this is not going in our favor, and we all know, well, maybe we don't all know this. If you are buying options and you're primarily long calls, long puts, like we are in the Sector Secrets Mastery, we do not use ever max debit. Never, never, never. Because we're going to know long before that option value goes to 0 that we were already on the losing side of the trade. So we use a percentage base based on, really, in many ways, risk of ruin of the individual option. So this is where, we very well might take the paper cut on XLP. Mo is still quite valid because it's in the zone. So my point of validity with Mo, preferably, price-wise, technically, would be above the 55 propulsion. And I'd love for this to have some gravitational pull around. Take a look where I've highlighted this green area here. That's a really nice volume ledge. And then we have the point of control in that area as well. All right, you can see right there, point of control. Let's put that in there. I get a point of control in there. And what I want to remember is that that is a level that shows conviction from the standpoint of size, not just price, but size, volume. And so if we can hold some gravitational pull, in other words, it might be a little difficult to accelerate higher, but it should equally be difficult to get much lower. So we could use a technical point of control or 55 propulsion, which replaces the 55 exponential for me on this chart. But again, I'm going to deploy those paper cut losses. So if I lose a certain percentage of my premium paid, I'll just go ahead and cut those legs, those triggers of the entry loose. But technically, Furman, we can look to the point of control. We can look to the 55 propulsion. All right. Hey there, James. How are you, my friend? XLU continues to look interesting. I don't know that I agree. It definitely got our interest. We're kind of curious about it. Above the point of control, above the 200. We haven't gone double green exactly, but we are trading above the wave. That is true too, with fairly consistent green grab candles. Could it be something to keep an eye on? Well, XLU means NEE. It also means Southern. There's quite a few symbols within the NEE that I'm looking at for some clarity. I don't love any of them, but you're right. Can we start keeping an eye on it? We can. Are there other places that I'm a little bit more interested in? Take a look at the sectors here, gang. Look at the 1 month. XLU, not a ton of clarity when we go 3 month. Well, no, I take that back. I mean, it's down here. It's the second strongest sector on both the 1 and the 3 months. So for that reason, I agree. Let's keep an eye on it, James. But where things get tricky, and you're right. When I talk about a neutral trend or neutral, bullish, bearish momentum. So there's two different categories for me of looking at something that's bullish, bearish, or neutral. The trend and the momentum. The top row is the momentum. The bottom row is the trend. So momentum is bullish, James. I agree. But trend is still neutral. So how would we categorize this market? Really easy. We don't have to do anything really complicated. This would be neutral trend, bullish momentum. We always want to separate the two, right? Neutral trend, bullish momentum. So yeah, we are bullish to neutral on this thing for sure. And so if we get a volume ledge, something like in here, we got the point of control in there. We have a good thick layer of volume also in that area. We get a volume ledge. Would that be something worth keeping an eye on? I think so. I actually think it'd be a really good idea to keep an eye on that. So if you're looking for sort of an aggressive level, not just price and not just a technical level to watch, I'd keep an eye on that volume ledge sitting at about 69 and a quarter, 69. Yeah. So that would be one thing. And then you mentioned XLP. Yeah, XLP is giving us a hard time, James. It is. It is. I will say that if we see the broader averages, NASDAQ, S&P, tech, start to trade rather heavily, let's see if we don't see flows back into XLP. XLP, though, is getting hit by the fact that the companies within it, many of which are being hit by the narrative surrounding Ukraine and more specifically Russia, who's not doing business in Russia, who is, and then that initial reaction is what's being discounted into some of the stocks, and then it's dragging XLP. Do I love the fact that we've had 2 closes now below the 200? I really don't. So we're probably getting pretty darn close to paper cuts. Losses are part of life, right? We know that losses are absolutely part of our trading life. And for those of you that caught the webinar, whether you caught it on replay or live, I talked quite a bit about the rough start to January, that I took 4 paper cuts, had 1 nice winner in Pulte, but we took 4 paper cuts. When I say paper cut, gang, again, we're not letting the option go max debit. That is just categorically a bad idea. I can't think of a single reason to ever be in an option really past a 50% loss of premium. Something clearly is not going right. Either momentum has shifted, the trend has shifted, or the time decay is so intense that it's very unlikely you're going to recoup really much of that options value. So we think about those. And then, I think small losses are a whole lot easier to take than big ones. And that's the philosophy that we use. All right. All right, next up. Hey, Ronaldo. No, I appreciate that, my friend. Smash that. Look, I don't want y'all just to indiscriminately smash the like button, or, well, maybe I do. No, I'm kidding. Smash that like button if we're moving the needle with the notes and the conversations that we're having. And if not, leave a comment in the YouTube here and let me know what I can do to move the needle. What is it that you need from me to help you out to prepare for the week with our Sunday show. So I appreciate that, Arnaldo. Thank you. All right, next up. Hey there, Prabish. FOMC expected to be 25 to 50. Yes. So what does that mean, 25 to 50 basis points? Well, every 25 basis points is a quarter point, right? So there is no real discussion about a hold. If anybody starts talking about holds, mute the TV or just switch the channel, or whoever you're listening to, they start talking about a hold, run away. All right. There's a couple of things that I'm seeing happen right now in sort of the broader conversations about the markets right now. One of them are these just ridiculously outlandish targets. These clickbait type targets that the markets are going to make some significant move to very low lows or very high highs. It doesn't matter if it's the indices or gold or the dollar. Shut that hyperbole off. Those people don't know what they are talking about. They're just trying to grab your attention and not necessarily feed your mind with something helpful. Everything moves, well, most similar to a set of stairs or rungs on a ladder. There's always levels. We have to talk about the levels in between. That's number one. Number two is just a ridiculous speculation about what the FOMC is likely to do. The fact of the matter is the target rate probability, this free website does a fantastic job of really narrowing down what is most likely to happen and giving you a percentage probability. So quarter point hike, absolutely. That meeting is this Wednesday. Remember that. This week is all about that meeting on Wednesday. So keep in mind that the quarter point is what we would consider to be fully priced in. What is going to be the needle mover, the volatility event for Wednesday at 2 and 2:30 with the press conference is the statement, how hawkish is it? Because when you go out to May, take a look, there is an increasing probability, at least it's sort of neck and neck right now, where we could see that half point hike in May. It's not largely discounted. Are we going to see a quarter point hike in May? Absolutely. Because when we see the 50 to 75 column, that's another quarter point. But when we see the 75 to 100 column right next to it, then we know there's a growing and fairly significant amount of expectation for a half point hike. If we're talking half, a quarter point's discounted. Now it's whether we'll see a quarter or a half. Forget the hold. That's not even really a conversation. 1.2%, right? So don't let some of the speculation that happens, start to veer your thinking about how the markets are going to behave. So I'm with you. Prabish, 20, you're absolutely right. Quarter point. If it comes with expectation, do I expect a relief bounce? We can flush again. We won't know until we see the statement and the press conference. And I am not looking for a relief bounce unless the statement starts to hedge why they may not be as aggressive. Fed fund futures are showing this Federal Reserve is going to be aggressive. So if we get a relief bounce, we want to short into it, most especially in the NASDAQ, as I've outlined in the notes. Okay. And not just the NASDAQ, but also the XLK, XLC, XLY, SMH. Focus on the rips in tech. I'm really not focusing on shorting the S&P or even the Dow. The Russell is kind of up in the air, but tech is clear. The momentum is red bearish. The trend is red bearish. And what we have is a good series of red grab candles below the 200 exponential moving average. It's below the 200 simple as well. It's below those 200 propulsion. So when we take a look at the NASDAQ here on the open this morning, there's where it is, a tiny little candle. There we are trading down near the bottom of the range. We're up off that low by a smidge, but we're trading down near the bottom of the range of Friday's close. So if we get a rip higher, especially as it applies to tech, and I've added some volume ledges in the charts that I've given you all. So when you open up the notes, if you click on the chart, it'll enlarge. So you'll see the volume ledges that I've given you all in those charts. And I'll likely be adding some more charts to this weekly note. But for now, this is what I've got my eye on. All right. But yes, on the tech side, if we get a sigh of relief rally for whatever reason, I will be looking to short into the rip in those double red tech corners of the market. All right. Next up, Debbie S. How are you? When going long calls, play is bounce off the 55. Not always. Setting the first target, would that be off of Darvis, top of the wave? So 55 is not always why we would get long calls, right? It could be the wave. It could be a volume ledge. It could be the 21. But I get your point. That's one of, right? That's one of our levels. As far as first targets go, look at, yes, Darvis levels, major psychological levels. Look at previous highs. So you have an example here with KHC. Sure. So what would you do with Heinz? Well, I wouldn't call Heinz a great trend any longer, but still buyable. I mean, that's a good looking chart because, what do we have here? Well, there's your zone. That's your buy zone right there. So nice looking chart, Debbie. Really nice looking chart. Okay. We're still above the 200. Beautiful. That's a big deal. That's your equator right there. Okay, so there's your equator. Really nice volume ledge right in here. So I'll note that. Great volume ledge. Why do I call it a volume ledge? I'm quite literally thinking about price action climbing up these sort of protruding volume levels, right? I'm quite literally saying, hey, this market could climb that. I kind of think of Alex Henold and what's he going to grab onto to keep moving up the side of the mountain. You can see that foothold, handhold, foothold, handhold, foothold. You know what I mean? Right up that level, volume ledge. So target, I think there's a couple levels that catch my attention. Volume ledge right there. Okay. So it's just to focus on volume first. The volume ledge right there. So these would both be resistance. I'm very big on color coding. So red, right? Red. Okay. Next zone that's got my attention is this area right in here. That is a gap. So I'm going to pay attention to the gap close area up in there. All right. So I'll just make that sort of a yellow or a white area to watch. Okay. Let's see. Let's just make it white. Yeah. Okay. So then actually what we could even do, make it be a little bit more specific, is mark that level and mark that level right there. Okay. Mark those two levels and keep your mind. Okay. Yes, we've closed that gap, but that gap will have some implications technically price-wise moving forward. And then we don't want to be long without at least paying ourselves in front of that Darvis level right there. So in other words, that Darvis level, that's non-negotiable. That's sitting at 40.58, scale out around 40.45. So I'm looking at volume ledges. I'm looking at gaps. I'm looking at previous highs. I'm using the Darvis, right? If that Darvis, which is pretty much the high, a lot of traders will put their first target up above that level. We do not want to do that, right? So there's a bunch of levels to consider. And I'm usually a fan of taking one of the first, because if the market keeps going, terrific. I've got another half of my position I can manage. But if the market doesn't keep going, at least I've done my two jobs. And they're both really important. They're really equally important. One, I paid myself. when I can, not when I have to. And I've moved my stop to break even. In the Sector Secrets room, we always have two things we do when the market hits our target: scale out of 50%, move the stop to break even. That's how you let a winner not turn into a loser. That's one of the first steps. So thanks for the question, Debbie. All right, moving on to the next question. Neil, you just signed up for Sector Secrets? Very cool. Well, I'll be with you all in the chat, likely tomorrow morning for a bit. Wednesday, we have our weekly live session. Friday, we have our Q&A. So I'll see you in the room tomorrow. Excellent, excellent. Okay, next up is, let's see, what triggers the appearance of, hey there, Mr. Walker. What triggers the appearance of propulsion dots? Great question. All right, so what makes a prop dot go? You know, gang, here's something I really, really, really believe in. And that is, I don't like to sort of have a black box type signal or a indicator. I always want you all to know why it's doing what it's doing, right? I'll tell you what I'm measuring. I think there's just need for people to be proprietary about their indicators. I run. Look, if something works, I don't mind telling you what it is. Because look, a lot of people say, well, I don't want my work to be stolen. You're talking to a girl for 30 plus years. Everything I've ever cranked out has been in some way stolen, borrowed, whatever. Because here's the thing, take my tools. It doesn't mean you know what to do with them, right? That's why we spend the time in classes and the mastery and in videos to show you what to do with them. My husband's got a garage and then a warehouse full of tools. I could probably use 9 of them, right? So I always like to be very transparent. That's the secret sauce to propulsion. All right. How can you have confidence in something when A, whoever it is that cooked up the indicator keeps changing the settings? That's garbage. Or B, you don't even know why it's doing what it's doing. It's just a black box. We cannot, as humans, follow black box approaches for our career. Maybe for a while it's working, but as soon as it stops working, we don't know why. And the brain says, well, I can't follow something I don't understand, right? So, I have a theory, and I don't know if the sign is still on my bookshelf or not, but there's a little sign that says, because mom said so. I can't do that, right? Only our moms can. So I think the rest of us have to say, well, this is why we're doing it. So there you go. The one EMA has to be greater than another. It's an interaction with a prior low. That's it. That's it. So it's really what? It's a moving average cross. Exponential moving averages are crossing. That's what this first line really is telling you. The secret sauce, but not so secret because I'm telling you, is the interaction with price. So there's got to be a little bit of an interaction with price. And that's really it. And then what 3 and 4 tell you why the dots would continue. So it's really important to me to be transparent about stuff. I've told you all what any of my indicators are. I think it's really important that you know why they light up and do what they do. And then I can teach you how to use them because that's the real value, right? Okay. I hope that helps. And thank you for the question. All right. PALL. Sure. All right. PALL. Down to the 13. I'd like to have more dots there, but here's something kind of cool about that one, Tom. It just closed a gap. And we've got a little bit of volume here at work. That could be interesting. That's palladium. I like the idea of playing commodities. So yeah, I do like that. All right. So PAL, that could be interesting, but it's an aggro level, Tom. 13 exponential, decent volume ledge, gap close. While it might be aggro, there's 3 Ys we just found right there. Gap close, 13 propulsion, small volume ledge. That could be an interesting place to look long, but I would not back the truck up there, but it's definitely valid for a potential buy. All right, so that could be interesting. That could be an interesting looking chart. And of course, it's double green, right? Double green. All right, so next up is, what are my, I skipped this question here. KRE banks. Ambus, I wish we had clarity on financials, whether that be XLF or KRE. It's been very difficult to get some clarity. I've backed off financials for now. Maybe we'll get a little bit more clarity after the FOMC, but right now it's very choppy. And I would say don't even play the tide. Let's focus on the relative outperformers, the boats that are actually clearer. Could be to the downside or to the upside. It could be the boats that are clearly in an up or down trend within these ETFs. So I've been backing away from financials right now. What does our book look like right now? Staples, commodities, oil stocks, short euro. We have a pretty full book. And then what am I looking to get into? Most of what's working right now, looking at shorting tech on the rips, right? Not so much financials, not even that much with healthcare, shorting financials on the rip. All right, next up, Esteban asks, what are my thoughts of supply demand strategy? I don't really, when you say supply demand, have I used it in the past? Well, I'm not quite sure, Esteban, what you mean as far as supply demand strategy. I look at supply and demand. I might think of volume. I might think of commitment of traders. I'm thinking really sub-market sonar size conversations. We might look at inventory volatility, crude oil, anything that natural gas, any of the inventory numbers. But I'm not quite sure what you mean. But I think it is important to understand supply demand in terms of, well, if we have supply, that's liquidity. Liquidity for a particular market usually is fairly bearish. Demand is bullish. So I'm not quite sure how you're measuring that or what you're using. But Esteban, I will look at commitment of traders, volume, trends in those things, sure, of that nature. Okay. Could be a VWAP. All right. Next up is, where do I get my commodities news? Nick, I will keep an eye on things like Forex Live. I'll keep an eye on, it depends on what kind of commodities, right? So if you're talking about grains and so forth, I'll find a good USDA calendar. I don't know what you mean specifically commodities news, but I don't really follow news. Look, I'll give you a great example. I'm more interested in the calendar, Nick. I'm more interested in when is the USDA going to release crop reports. I'm more interested in when is the EIA going to release inventory numbers, things like that. I'm not really interested in news per se. Look, on Friday, it was amazing how many traders had seen a Putin headline, right? Out there in the World Wide Web had seen, a Putin headline and thought the markets were going to rally. It is startling how much traders use news to make decisions about trades. News is not about trades. When someone starts talking about macro, ask them, are you talking about headlines or are you talking about macroeconomics? I am never going to talk about headlines unless it's the headline number of a data release, and in which case it goes over to the macroeconomic side of the conversation. Following news is going to create a situation where we are, one, likely chasing things that have already been reacted to, because how do we know the news is coming out now? Anytime you see a news headline, the first thing you should do, ask yourself, is this data? In which case it was associated with a that was associated with the time of day. And if it isn't, if it's a news headline about, Ukraine or something like that, OPEC, whatever, go find the oldest instance of that news being released. Because chances are when you're hearing about it, it could be a day late, an hour late, hours late, and the market's already responded to it. But remember, television is going to just keep looping this stuff around, like ESPN loops around highlights. Yeah. So be careful. And I know what you mean as far as news. I think focus on the calendar events, not so much headlines. Headlines will get you in trouble. Okay. They really, really will. All right. So Tim's asking, did I say room drive? If I did, I misspoke, Tim. If you are a member of the options room, futures room, or my sector secrets mastery, I sent out the alert. You have the link either on your mobile device, or if you log into the room, you'll see the link in the alerts section. I put them in the alert so you can pull them up on your phone if you want to, and it just will pop up that way. Very easy to track. You don't have to go download a PDF or some such thing. All right. So gang, I'm out of time just like that. That 30-minute show. Wow, that felt like it went even faster than our charts and coffee. But we'll be back tomorrow for charts and coffee at 9 a.m. Monday through Friday, 9 to 9:20. We're here for charts and coffee. Bring your questions, log in early, and I just go right down the line with the questions. Okay. All right. So be good to each other. Thanks as always for tuning in to our Sunday show. Leave any questions if you have them. Smash that like button if it's been helpful. Enjoy the rest of your evening, and I'll see you tomorrow.